Welcome to Buy, Hold, Sell. My name is Matthew Kidman, and today we've got a special edition where we're talking about stocks that are the most shorted on the Australian market. Shorting is when someone borrows the stock, sells it, then it hopes the stock price falls and they buy it back, and the difference between the sell and the buy is their profits. And to talk about shorting stocks today, we have Chris Stott from Wilson Asset Management and Simon Bonvourie from Cadence Capital. Simon, I'll start with you. The first stock that has a big short register is Metcash, the grocery wholesaler.
What I look for when shorting a stock is earnings profile that's declining, so forecast to give negative earnings growth along with the share price momentum heading down. So Metcash fulfills those two criteria. It's facing really stiff competition from Woolies, Coles and Aldi, who is the disruptor. I think they've got a new CEO in there who's going through a strategic review at this point in time. They've made suspect acquisitions over the last few years. I think it's a sell.
Still a short.
Short.
Chris?
Yeah.
Sell, Matthew. Woolies, Coles, Lidl, Aldi, Costco. The competitive environment has changed dramatically and it will so in the next decade. You've got a balance sheet where the debt level is almost matching the market cap now, not far away. Costs growing at faster than revenue. Sell.
Well, let's go over to Western Australia, where iron ore was a darling for so many years and now it seems like it's a disaster. And one of the most high profile is Fortescue. Fortescue is well shorted. Do you think it should stay short on that stock?
I think sell again, Matthew. Fortescue is really a call on China in our opinion and what you think Chinese growth is going to do, and we think that will continue to surprise on the downside. They've come out with a target of 7% growth. We think it will be lower than that. So tough for these iron ore names from here, so sell.
Iron ore prices have more than halved. Simon, how do you see it unfolding from here?
Expect the unexpected. So I think it's possible iron ore could go really low. Rio's talking about wanting to get cost of production down to $15 a tonne. So if that were to happen, these second tier players would be wiped out. So at the moment, Fortescue, I see it as having a massive debt level, which is too high for the company's earnings. There's pressure on the iron ore price. I think it's going lower, and Fortescue's a sell.
Twiggy's under pressure. Staying in the West, Atlas.
Well, at this point in the cycle, at the current iron ore price, I don't see them making any money at all. They're losing money. That's only sustainable for a limited time, and it's a short as far as I'm concerned.
Does Atlas survive, Chris?
No, sell, Matthew. Similar Chinese views. I just can't see the cost of production is too high. As much as they try and bring that down, I just don't think it's going to be enough. You're not going to see the spot price trade above that, so sell.
All right, let's go to servicing companies, and one that was a darling for a long time and it just seems to have come unstuck is UGL. Look,
UGL's a hold for now, Matthew. It's certainly done a lot of work to the downside. New management team have come in there. We wait to see what the outcomes are there in terms of where they take the company, but large infrastructure spends here in Australia over the next decade could be well positioned to take advantage of that, so hold for now.
UGL had a high profile CEO that did a lot of acquisitions, and that seems to be unravelling. Still a short, or time to have a look at it as a long position?
No, so I think it's still a sell or a short. Price momentum's still on the downside. It's in one massive downtrend. It's fallen from $20 down to $1 something, and it's still going. Until there's evidence that the share price has turned upwards significantly, I'd keep it on as a short. I see that stock to have quite significant earnings risk, and the company's talked about contracts where they've troubled contracts they've got, and I don't think it's been all resolved yet. So I'd still have it as a sell.
All right, let's switch to a growth area, healthcare. Primary healthcare has recently seen a change of management. Stock has been well shorted, but has held in at about a certain level. Where do you see it going from here?
Look, this is an interesting one. The sector was under pressure with some of the government policies that were possibly coming in, and it looks to have resolved itself to the upside. I think they've got a new CEO who's had quite a good history at Leighton's and Qantas previously. He hasn't had recent experience in the healthcare sector. However, he has got a good reputation for delivering results. I wouldn't be shorting this stock at this point in time. The price looks to have turned. I wouldn't necessarily buy it, but if I had a short on it, I'd cover it.
You short the new management team?
Hold, Matthew. Wait to meet the new CEO, hear what his strategies for the business. They run world-class medical centres, no doubt about that, and the pathology business has been under pressure, but certainly they have a strong market share in that here in Australia. So good quality business, good quality assets, but a hold for now.
There you go. Once the rot sets in, it is hard to turn around for short stocks.